Did the Fed spark a market pump today? We'll break it down for you. Don't want to miss it. Let's just jump right in. I do want to thank our sponsor, and that is Uphold. You guys can go over to Uphold right now because this is the time to get in. I know there are many new viewers out there that are starting to move into crypto during these unstable times because you see this as a buying opportunity. Well, you can now earn crypto better, staking rewards on almost 20 assets over there, all sorts of assets available in the system. And one of the cool things about Uphold is they have a whole new debit card where you can put your own crypto in and spend. But the cool part is the rewards that you can get. And the part of the rewards are XRP rewards available right now, up to 6% XRP on everything you buy. This is a limited offer, so make sure and understand that. There's some other elements to it that I think are cool. And one of those, of course, is the direct deposit. If you get a direct deposit deal, you can start bonusing up to as much as 10% in XRP. A lot of benefits, so check it out. Use our link down below. It's going to help us out. Also get you guys into Uphold, which is a great place to trade crypto. Let's go over to a couple other points I want to hit on. And this, of course, is Kobe hitting on Bitcoin's on track for its biggest daily gain since May of 2025, nearing 91K. As time of recording, we had just clipped over 92,000. We'll show you guys the charts here in a minute. In the last 60 minutes, 140 million shorts have been liquidated. We're starting to see market maneuvers happening after Chair Powell's announcement last night. I'll break that down, but there are a few things that could be causing some of this retracement. And this is happening across all the altcoins as well. I want to go to a clip real quick because this will break down, can stocks rally to the year end? Take a look.
I was talking to somebody last week about what's like the most obvious thing that you think is going to happen that people still aren't expecting, even though it's obvious, like kind of joking around. And the truth is, they're going to buy these Mag 7 stocks. And I know how badly people want there to be a new narrative. I know how sick and tired people are of seeing the same 10 stocks at the top of the leaderboard quarter after quarter, year after year. And I understand how people went overweight, healthcare and energy and staples and some of the other areas that started to rally in late November as the AI story started to get a little bit shakier. But like in the end, these are the biggest, most liquid stocks, and contra the bubble narrative, they're not even expensive. Meta is a 22 times forward PE. Like, what are we talking about? You're going to tell me Costco at 45 is cheaper? Nvidia is the second cheapest stock in the Mag 7. It's got a forward PE now at 24. And I understand all the stories about competition, et cetera, not dismissing that. But again, this is the best company on earth, and it's 24 times forward earnings, a multiple you have never been able to pay for a name with execution at this level.
All right, one thing to think about, guys, I want you to go back to the late 90s, and I want you to just go do a little history tour, because he is exactly right. There were a lot of stocks that many people were saying, hey, the bubble is here. This is prior to 2000 when we did see the dot bomb occur and saw almost 8 trillion come off the market cap of these stocks. But the point being is that there were a lot of companies that came out on the other side. And I think that's the real question, is what winners are going to come out on the other side of the AI narrative, but also some of these Mag 7, because some of these are going to win, some of them are going to lose. I don't know which ones, but the point he's getting at, this is still early, whether we like it or not. McKinsey also came out with a big report here, and there were some interesting points that they hit on that I think you need to pay attention to. First is this right here. Here's the last 20 years have seen a radical reshuffling. This is my point. Look at back in 2005. You had Microsoft at number 3. Look at that. You don't even recognize any of these companies other than Walmart. Bank of America was in there, Johnson & Johnson, HSBC. Now, number 1, NVIDIA, Apple, Microsoft, Alphabet, Amazon, Broadcom, Aramco, Meta, Tesla, and TSMC. That's the difference that we've seen in this market in a very short period of time. If you look further into their chart, which I thought was interesting, is the positioning ranking that started to move, including a lot of companies in 2023 around revenue share and market share of revenue. You got new players in there like Huawei, Xiaomi, et cetera, that are playing a huge role in how technology is moving out. Further in this point, a report that I thought was also interesting is the investment by big tech players that escalated near 40-fold. So I don't know if this is the dot bomb era or not. What I do know is it has a lot of similarities of new industries being birthed overnight and starting to ramp up quickly. And what I'm talking about there, of course, is crypto and AI. Those are the two categories that you got to watch going forward here for sure. There are some effects, though, that the market is starting to hit on crypto. One of them, of course, is the Vanguard effect. Here's Balshunas talking about this. Bitcoin jumped 6% right around the U.S. Open on first day after the Bitcoin ETF ban was lifted. Coincidence? Not necessarily. Vanguard, of course, seems to have a little bit of a degen in them, and of course, that is what we're seeing right now. Do you think that is the case here? I don't know. Vanguard has not been a big proponent of Bitcoin in the past. Now, all of a sudden, guess what? They are now on the Bitcoin boat. So let me know what you guys think. Is Wall Street really the key here to putting the nail into the market to maybe get it to this next level, or is this just a short-term pump? Here was Hunter Horsley of Bitwise. Now 18 ETFs, publicly traded funds in the U.S. I mean, this is crazy to have this many ETFs out there in terms of open markets, diversified single asset, equity, options are coming, all these kind of things. This is a very interesting time because we were talking about we were talking about Wall Street that is reshuffling the entire way that they're doing business. And of course, companies like Bitwise leading the pack there. BlackRock also hitting full steam ahead with Bitcoin ETF volume surpassing 1.8 billion in the first 2 hours of trading today. So activity very active again on Bitcoin. President Trump is, of course, calling for the Federal Reserve to cut interest rates. What's new? You've got Dimon said that Powell should reduce rates. Now, that's an interesting new statement coming from Jamie Dimon. But I think what many people are looking at is the announcement that we saw last night by Chair Powell. And that was that Chair Powell didn't do anything. One thing, though, that is coming is this announcement right here. Trump says he's going to deliver a major announcement today. As we're recording, it has not been delivered, but my anticipation is probably something around the Fed assignment, whether that is Hassett or if he's got something else up his sleeve. You got to, with Trump, he comes out with these kind of no-win announcements, and then he hits one out of the park. So you don't know what you're going to get. We'll see hopefully later this afternoon. Other thing you've got, of course, is Chair Powell did not comment on the economy. You've got all of the world waiting at bated breath of what you're about to say, and he doesn't even talk about the economy. I don't know if he's trolling or if that was just something they're setting up for December the 10th. But one thing is for sure, they confirmed quantitative tightening is ended. And I think the fact that the market is pumping and saying, well, okay, he didn't hurt the market and tightening has ended. We have that confirmation. Where does easing begin? I mean, people look to January as the possibility of where easing could begin. You look at this right here in terms of poll we put out, was the Fed announcement a flop? What might trigger the next major move in crypto? Right now, regulatory process holding up very slightly at 28%. Rate cut, number 2 at 26%. So people are really pushing the rate cut and the regulatory process. And of course, I've talked to 2 analysts out of DC over the last 30 days. Everybody is still pointing at 2026. And the concern is whether or not it actually gets done in the first few months, because you remember the government shutdown could happen again in January. You also have this huge defense bill that's going to be going through Congress. All of this could take a lot of power out of Congress and push what we will see in terms of the next crypto bill maybe down the road, and that's the concern that everybody has. Will Bitcoin hit 150K? If you look at this December 31st chart on Polymarket, let me kind of zoom in on the graph right here. Look at the way that this, I'm going to kind of zoom in on that for you guys. Look at the way this is performed. It was almost 40% just a couple of months ago. And look at the failure in this market. Now people definitely not saying that that is the case for a December 150 number. And that is the kind of scenario that we are seeing in the market. Now, many people would say, well, maybe that is the time in which a market could actually spring forward. Some points right here would say, all right, if that's not the case, maybe altcoins are on the move, and many people believe that's the case, that we could see an altcoin season rally again into new highs in December. Let me know what you guys think. Is that where you stand on this poll? Drop some comments down below. If you're not subscribed to the show, take some time, hit that subscription button right there. We do appreciate it. And there's a lot of you that are brand new viewers. And I know you're coming in from maybe stocks and bonds and maybe the traditional market, real estate, a lot of investment guys that are starting to look at crypto in a different way. We'll welcome in. Let me go to a quick clip here because this is where Bloomberg is talking about the market capacity for more pain. Take a look.
I don't think the pain is over for crypto overall. Part of the reason that I have been negative, or the main reason I've been negative on crypto over the past 5 weeks, and hence worried about the volatility seeping into the broader market, is the whole digital asset treasury company dynamic. That with all the ETFs and the leverage that is built around that, they are now a multiplier on the way down in the same way they're a multiplier on the way up. So they amplify the moves in both directions. And many of them are turning into a negative kind of death spiral that as their stock price trades below their crypto holdings, the only logical move is to start selling down their crypto holdings to exacerbate the moves in the downside. Now, most of these companies have kind of chased it and are late to the trade. MicroStrategy is the big one, and it's really important. And that's why their statement yesterday is a big relief. We know the seasonals are generally good. People chase year-end trades. They talk about the Santa rally. There's this idea that this is the time to kind of position. If you think we're going to make fresh records, why would you not get bullish now? I am more worried about that. I think that we're probably going to get a hawkish cut from the Fed next week, which is going to be problematic in the margin. And I think that the crypto sector is going to have more and more downside, and that's going to hurt the retail sector when we've already got a K-shaped economy pressuring through the cost of living and rising unemployment at the lower end of the income spectrum. So I think that's going to pressure investor sentiment across the spectrum, which is going to add to volatility and make it harder in the short term.
All right, so a couple of points he hit on there. One was the statement he talked about where Powell's going to have a hawkish cut. I don't know that I would agree with that in its entirety. The point that I would look at with Powell is that he is holding on to this 2% target by the Fed in terms of inflation. Remember, a lot of you don't realize inflation is accumulative, so it continues to go up no matter what. The key is what percentage does it go up and what's acceptable for the American economy. What's not acceptable right now, and I think this is where Powell is trying to fade the heat on it, is the jobs position that we're in right now. If he comes in with a cut, which I think he will, in December, I think the next steps moving forward is going to be forcing his hand because of the replacement that's going to be coming in right behind him. Whether that is Hassett or someone else, the likelihood it's going to be a pro-Trump administrative selection, and it's going to start. They are going to start cutting at will. We could see a full 1 point cut in the Fed fund rate, and I think this will start to move the markets forward. Now, whether that comes in March, April, or May is the big question because this is how the market will play into it. I want to go to a clip here from Brad Gerstner, who's coming in from Altimeter. And you got to remember, Brad is one of the biggest VCs out there in Silicon Valley. He's been around forever, very tech-oriented guy. And he made some interesting statements here I want you to listen to. Take a look.
As a hedge fund, we run very limited leverage. We certainly would not be levered Bitcoin. And in fact, I've commented on Twitter about it with respect to MicroStrategy. It works incredibly well on the way up. But I said I didn't understand the strategy. And when I can't understand something that somebody explains, time after time after time, that's a warning sign to me. And I think you're seeing kind of some of the unlevering that is occurring. Bitcoin this year is down 10%. Gold is up 50 or 60%. I hope we can dispel the myth, right? One is a risk asset and one is not. Right. And so it doesn't mean that you shouldn't own Bitcoin. I own some Bitcoin and I might be buying a little bit more, as it comes down. But it is a speculative asset that over time will have more and more utility. But we have to be honest with what it is today.
All right. So I think a lot of people do understand that. I think most people who follow our channel understand, yes, it's a speculative asset. And with the speculative asset, you have these wide swaths. I think the real question was, how much will Bitcoin come down? And I think the factor that we're going to see in terms of unwinding in the market is going to be triggered by a lot of these digital asset treasuries to the point that Gerstner is talking about, which is MicroStrategy going forward. Now, with that, you've got to consider one other one, and of course, that is BMNR. The leader of BMNR is Tom Lee. Tom Lee is predicting Bitcoin will hit a new all-time high before the end of January still. And he's not giving up on that because, listen, they're not blinking on ETH either. ETH just fell near 30%. The Treasury slid $14 billion down to 9.7 billion. The stock is down 25%, and they bought another 100,000 Ethereum. They now hold 3% of all Ethereum and openly are chasing the 5% mark, which would be a huge amount of accumulation. And remember, we've got the Fusaka upgrade. We just had Drake on to talk about that and what this might mean around not only the upgrade of what we'll see with ETH, a Fed pivot possibly in play. Could the January shareholder meeting get dicey for Mr. Tom Lee? I don't know. And again, some of this just may be playing into the cycle of where this market is going. Now, for the market in general, this is Paul Atkins, new SEC chair, confirms crypto innovation exemption is launching in January. So that's a positive thing. We'll continue to see the SEC being pro-crypto, which is all very good. Projects can now launch tokens and products fast without full SEC registration for the first time ever. That in itself will be a positive thing. But he was asked specifically around the issue of what could happen if we don't see clarity go through. And what I'm talking about is the Clarity Act. What does the SEC do to deal with that? Let me go to this clip right here. Take a look.
Can you do what needs to be done with crypto without legislation? And do you think that can happen before the end of the year?
But, we'll see. I can't prognosticate that. But we have enough authority to drive forward. I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track, and we will be able to forge forward with the crypto area.
All right, so one thing to consider here, because the SEC has been in this position before where they're forward-thinking or forward-looking, both on an anti-crypto position and now on a pro-crypto position. If Atkins is saying what he means, and that is that the innovation exemption would essentially open the market up to no action, because that's the big concern everybody has, is am I going to get acted on by the SEC until clarity can match up to it, then this still may be a good enough kind of scenario playing into next year of where a lot of major companies could move quick, because I think a lot of people are starting to realize if we don't move now, we miss the next major wave. So it's very possible you could see even banks coming into this area. You could see major companies coming into this area because of the innovation carve out that they're talking about. And if it works, that could be all we need going forward. Now, let me go to another thing, because this is getting into a clip from Raoul Paul that talks about this cycle, because this is what everybody's asking. Isn't this cycle not matched up with the previous cycle, et cetera? And I know everybody's a cycle person out there, but listen to what Raoul had to say about this. Take a look.
Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the everything code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. Why do we have an elongated business cycle that looks like virtually no other real other time? Is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet. But this one is a 5-year cycle. And this is what it looks like. The 5.4-year sine curve, 5.4 years is the exact average weighted maturity of the debt. The ISM should peak by 2026.
Okay, 2 points hit on that. One is what he stated there in terms of the last debt cycle, where it was elongated in terms of to basically place the debt into position. And what they're talking about is exactly right. ISM, if you go back here to this chart, this is 2020 to around 2022. And when it's above 50, which is what we're zooming into right there, you can kind of see where we are today versus where we were back then. If it's above 50, This, of course, indicates that the market is in alignment with it outside of the tech sectors. So everything but tech, all this is basically going into what Raoul's talking about, this business cycle, and we're not there. So if he does think that this is happening, then seeing this going into the next cycle, and I'll throw out 2020 because that's the big COVID dip that we saw right there. But if you go back here, even to 2016, there's the run up right there, small dip, and then a boom in the ISM, moving on into what we saw in 2017-18. Of course, that was when crypto was very young. But the point was the markets, of course, saw some big movements at that same time. So it's possible that he could be correct on this around business cycles because of the debt structure and the way it was done. And we don't know yet how it's going to be restructured because we're dealing with high interest rates, which is why we need lower interest rates. All of that plays into a thesis that could be going forward to what Raoul is talking about. Now, one thing that does play into the thesis is this right here. This surprised me. But Bank of America now is officially recommending clients to put up to 4% of their portfolio into Bitcoin and crypto. Now, this is a conservative, major conservative bank. If a conservative bank is pushing to 4%, imagine what a private office is doing, what we're seeing around family groups, trusts, and then going into managed capital. All of that could now be pushing into above the 5%, into maybe close to 10. That's where we are leading right now. And unlocking capital is a big trigger going forward. This is something I talked about with an analyst here recently, is the capital unlock. I want you to think about this for a second. The amount of assets that are going on to RWA, tokenized assets, over the next 18 months, compared to what we have assets available that are tokenized right now to what they will be in 18 months, is dwarfed in where that market is going. And what I mean by that is, imagine if you're an old school investor, you've never had the ability to sweep accounts, go out into DeFi, do all sorts of yield farming on stable coins, etc. None of that was available prior to now. Now, if you look at the amount of market that is out there in terms of liquidity that could have access to that, those are the other things that could cycle into what Raoul is talking about, which is liquidity flooding the market because of its ability to move so much faster in these new instruments that are being launched by Wall Street. So think about that. A lot happening in the market out there. We're going to continue to cover this because there is a lot happening right now. Bitcoin, of course, on a huge run for the day. We're holding it about 6.9% up on the day. Look at where we are on Solana, also a 10% move right here. Sui made a monster move, almost 20% up on the chart right now. Even Link, Chainlink moving up to 11%, XRP up 7%, back up to 220 almost. And of course, as we get into some of the other assets, Ondo up some. Pengu, one of the meme coins that we think still has an opportunity, up 25%. Let me know what you guys are doing out there. Are you trading this cycle right now, or are you looking for a retracement for Bitcoin to lead the way? Hit the comments down below. Make sure and join our own private member group as well. If you haven't done that, take some time. It's a free group. All you have to do is click the link down below. It gets you into the Bear Market Edge, and you get free insights from us. And the best thing to do is, of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.